Good morning, traders. This is Tony D from Easy Markets in Sydney. We have ourselves a very volatile night overnight. People were starting to think that we're going to get a big sell-off here as Hong Kong crashed. Some of the speculation here, a speech given there by the Chinese, one of Chinese financial regulators, spooked the markets. That led to heavy selling coming across onto the DAX and onto the Dow futures. Unfortunately, such selling has been short-lived in the past, and again, it was the same case today. You've seen US futures now fresh highs. Looks like Powell's got the nod to become the new Fed chief. And on the back of that, we just had news out in the last couple of minutes that the Senate budget blueprint has been passed, setting the stage for the tax reform to be argued in the US. So that's a very positive development for the US dollar. Dollar yen surging back above 113. Really getting support here on that risk appetite. Japanese elections polling showing that Abe is likely to win in a landslide again. That really opens the door here for more yen weakness as Abenomics gets its second leg. That leads into trades where you're long risk. So what trades should you be looking at there? Trades like long dollar yen, long euro yen, long Aussie yen all make sense. In the current environment. Certain pairs which have got a little bit more danger are the pound and the Kiwi. Both have got political issues. The pound is still struggling to get that deal. Every day you don't get the deal, the market goes lower. Still going lower at the moment. Merkel came out looking supportive. There will be a deal eventually, but until the market gets that final clarification, it's easier to keep selling and then have that surge higher if a deal is passed. Deal basically at this stage is on the Brexit negotiation, Brexit bill amount, and then beginning of the 2-year extension that Britain has fought for in the last couple of weeks. Oil markets down a little. That's 50 to 30 levels seem to be a little bit too high. Those geopolitical factors have not really come through there to support the oil market. So at these levels, you're looking for range trading. Now we've got to find the bottom end of the range. Could be 50. That level took a little bit of time for us to pass on the way up. If you're looking at the Kiwi dollar, we're back below 70 cents. First time for a few months for the Kiwi to be below 70. Support is still struggling to be found. So if you're looking at the Kiwi dollar, there's two big pairs in the Kiwi dollar. One is the Aussie Kiwi, and the other is the Kiwi US dollar. Now the Aussie Kiwi is up towards the 2015-2016 highs. That 113.30 level has proven a mountain of a resistance to surpass before. A break above does open the door for significant more buying and more Kiwi weakness. So this is the major cross there for the Kiwi dollar. And if the Kiwi itself has broken now below, let's just bring that up for you. Kiwi itself has broken below 70 cents, then you've got the potential for the market to roll through towards some of those further levels on the downside, 68, 50, 69. All right, traders, if you do want to access a dealer like myself, please come through to the dealing room on the contact deals below. If you do you want to join the active traders group where you can get a dealer assigned, then there's a link there in below the YouTube as well. All right, be nimble. We'll be back tomorrow morning. Back on Monday morning with another update. See how the markets evolved over the weekend.